Hi guys, so we're going to go over yesterday's trade. Thursday it took a short trade on the NQ, shared it on my socials, so and a few of you guys mentioned on there that you'd like to see how I framed it, my thinking behind it. Yeah, so going to go into detail on that trade here today. Before we get started, if you haven't, please do subscribe. We'll be releasing some exclusive content just for subscribers in the coming weeks. So yeah, please do subscribe to the channel. Like the video, costs you nothing, free of charge. So yeah, like and subscribe, and yeah, get yourself some exclusive content. So yeah, let's jump into the charts. Here I was looking at the NQ, and obviously driven up throughout London, and then New York as well had driven up, and we had taken buy side liquidity in the form of the all-time high. So we've tapped into a key level, and yeah, the morning session was pretty awful. It just kind of chopped about quite a bit, and didn't really offer much in the way of opportunities to get involved in any meaningful trades. Yeah, so it took that all-time high and just kind of drifted down lower, but didn't really break down with any real energy. But the one thing I noted is come 12 o'clock, so midday, we did get this high got put in up here on the NQ, and something I was looking at was the high on the ES, the E-mini S&P, and the E-mini S&P actually put in a higher high, which created an SMT. Now, when you see SMT created at a key level at an all-time high, there's a good chance that you'll get a reasonable setup. So yeah, once I saw the fact that the NQ failed to take that high, I was interested in potentially looking at a short trade, but obviously had to wait for further confirmation. But the fact that we traded up to that all-time high, taken the liquidity, so we've traded into a key level and created an SMT as well, meant that we could look for a trade here, and that the conditions may be favourable based off of those 2 points. So with that in mind, yeah, I was watching the 5 minute and the 15 minute. Now I was watching the 5 minute because the 1 minute chart, when we've been sort of trading up like this, you want to see significant movement towards the opposite direction in order to get involved in a trade in that direction. So I tend to like looking at the 5 minute and the 15 minute for those breaks of structure or moves of displacement, because if you go off the 1 minute, you can get very easily caught up in what is sort of fake outs and stuff like that. So I tend to look more towards the 5 minute chart, and this is kind of what I was looking at on the 5 minute. So we're at 12.40 here. Got the SMT. Prices started to move down off of failing to take that high, remembering that ES has made a higher high there. So yeah, we're just watching price action here, and what we're looking for is these lows to be penetrated in here, which they eventually do get penetrated right there, and it does wick all the way back up, which was a little bit concerning for me. But the fact that it had pushed down and wicked up, we could have seen price just travel up and this be a sort of fake out, if you like. But the fact that we had the SMT there, it failed to take that high, gave me a little bit more confidence. So moving things along, and we can see on the next candle it definitively breaks this low. So we've got a 5 minute change in the state of delivery. So it takes out this candle's close here. If we zoom in on that, you can see we've got a low there. It comes up, doesn't break the high, and then blast through the low, which is a change in the state of delivery. So the state of delivery's changed. We're now trading lower. It's delivering price lower. It's not delivering price higher. So we are looking for shorts essentially. And if I drop down to the 1 minute chart, this is what I was noting. So I'll just skip back to the 5 minute. When we dropped down and broke these lows in here, we displaced and left a 5 minute fair value gap. And I had that marked off on my chart and was watching the 1 minute chart to see how if price would come back up into this 5 minute fair value gap, and if it does, how does it react when it gets up there. So we'll just move this along, and here we can see, if I move it along a little bit further, this is the candle that I entered in on. So I'll just move that along a little bit, and I didn't catch it right at the top. I didn't set a limit order. I'm just going to skip this back once here because I'm going to try and catch it where I actually entered, which might be interesting. But so if we move that along, 1, 2, and then it was this one. So there is, I haven't quite caught that at my entry, but it was around that, and I noticed that it was wicking, and it did just about tap into that 5 minute fair value gap by literally a single tick. And I decided to enter the trade. It looked to me like a reasonable sort of short trade, and the RR on it was really nice. I set the stop limit really tight, so stop loss was literally just above the 5 minute fair value gap, so minute stop on it, and my take profit was all the way down here at the lows. Now something else I was looking at when I was viewing this was the structure that had been built up here, and what we have here is essentially a market maker sell model. So we've got the accumulation down here, and then we've got the move up, smart money reversal, break of structure down, and then we've got this tap of a bearish PD array before a potential drop back down below the accumulation here. I had these marked off here because this to me looked like low resistance liquidity. Now this trade wasn't perfect, you know. I didn't manage it as well as I should have done because I was doing some other bits, and I had to kind of look at it from my phone and from my tablet. And I actually did close it early, which was unfortunate because it did run in my favour. So yeah, well, let's just move this along and we'll see how price develops. Now the other thing is the timings. So we're around lunchtime, price has moved up, and as we know, around lunchtime we can get the tendency for price to show some willingness to reverse either into 50% of the range or further. So that was in the back of my mind as well. We had just gone through the 1250 to 110 macro, so that had just played out, and we started to move down lower, and it did chop around a little bit in here, but eventually it drops down and it starts creating bearish PD arrays, and I was marking these off and annotating them, and you'll see those from the video that I shared yesterday. We get a really nice bit of displacement here. Price comes back up, tests that order block fair value gap. There's a 5 minute fair value gap in there, and then drops down again. So really nice bearish order flow here. It does wick through that. Now here, still my stop loss was set up here. Didn't set to break even yet because we hadn't really moved far enough for me to be willing to do that, and it continued to wick into this fair value gap that it had created on the 1 minute chart before displacing down lower. Sorry, printer's going off there. yeah, so it started to displace down lower here. So let's just move it along. Again, created another fair value gap and order block in there. And here it started to stall a little bit, and this is, I think around here I took my profit of about it's around $500. So I took profit in these wicks somewhere in here, because I had to go off. I couldn't watch the trade anymore. But I'm going to play this out as if I didn't take profit there, because there's nothing wrong with taking profit there. It was a decent return. I think it was like 3R, around 3R that I took profit at. But I just want to play this out, because what we get is it shifts up, but it does respect bearish order flow. And something that was in here was a 15-minute fair value gap was in here. So this is what I was looking at, and I wanted it to treat this, I wanted it to disrespect this essentially and treat it as an inversion fair value gap, which it did. So it broke down, and what I was looking for is on the 5-minute chart in particular, I was waiting to see if it broke here below 50% of this fair value gap, this 15-minute fair value gap. And if it did, I then felt quite comfortable to then move my stop loss over break even, and if it comes back and takes me out, then the likelihood is that we're wrong about this trade. But yeah, that's kind of what I was looking for. Once it broke sort of 50% of that 15-minute fair value gap, I was fairly confident, even despite these sort of wicks up, that it was going to push down lower. So yeah, I was watching it on the 5-minute and 1-minute chart, broke that 15-minute fair value gap, and what you'll notice is there was nothing really on the 5 or 15-minute in here other than this low and this 15-minute fair value gap here. So to me it was clear that it was going to run to that. As I said, I did take profit a bit early, which was perhaps a bit of an error of mine, but you can see in here there's not much that it's going to bounce off. These are 1-minute sort of imbalances, not going to hold price up, in all honesty. So yeah, once it displaced below that 15-minute fair value gap, I knew that we were in for a decent run here. And I did move my stop loss down to here, because I didn't see any reason why it would come back up. But yeah, you see here, once we got to so we're getting towards 150 to 210 macro time here, and the trades played out nicely. You know, it wasn't heavy, it wasn't a fast price movement, but it did step down really nicely, respecting these PD arrays. There's a little bit in there, and as I said, this is where I took profit. But once it came back up, it really did start to accelerate towards the target from that 150 macro, and you can see there eventually it took out those lows, and as I said, we can see in here that we could treat this as a market maker sell model, because this essentially here is the original consolidation. We get the move up. Can I set that as accumulation? Yeah. So we can set that as accumulation. We can set this as the manipulation. And then we can see that here we have the distribution. And if I bring up my other screen here. Let's just open that in browser. Yeah, so you can see this is kind of what I was looking at, and you can see that we get the consolidation, the move up, smart money reversal, displacement, tap of a PD array, and then a real strong push down to the sell side below that original accumulation or consolidation. And that's, yeah, if you look at that, it sits on that really nicely. So that's kind of the thinking behind the trade and the concepts used. As I say, the key elements were really the SMT and the fact that we had traded to a key level, and then shown that price has shown its hand essentially here, where it's changed the state of delivery or market structure shift, whatever you want to call it, and then tapped into this PD array. Something I really liked was the wicks up in here, and that's why I entered, because not only did the other elements come together nicely, but when you see price wicking a PD array like that, after showing a strong move in the direction that you're looking at, you see some wicks in there. It's a good indication. I like to call this as price kind of spooling. Spooling before delivery, essentially, when you see wicks into a PD array like that, and it did play out into our favour. It's a shame I didn't hold for the duration, because it would have been about $1,200, and I only took about $5. But still, the idea was right. The concepts were put into practice correctly, and just wanted to share with you guys my thoughts and thinking behind that trade. It was like a 7.78R. I mean, that's a crazy trade. Probably would have put my stop above that high, but for some reason I put it just above the 5-minute fair value gap. In all honesty, the better practice would have been to put it above that high in case it did come up and wick into here. But I felt like putting it in quite tight, and that was correct in this scenario. And then we can just kind of manage the trade down, each time it respects these PD arrays, particularly with these wicks. You can drop down the stop loss to protect the trade. Again, you could have done so here, as it kind of steps down, moves back, steps down, and you can just shuffle down the stop loss. But yeah, that was the thinking behind the trade. I said I took profit far too early, but I couldn't sit there and manage it. I had to go off and do some other bits. So I was happy to take profit, and just more pleasing that the idea kind of played out. But yeah, hopefully you guys find some value in that and understand what it is that made me want to enter this trade, and understand the thinking behind it.